Hi everyone, let's go over my bullish and bearish Elliott Wave scenarios on Bitcoin, starting with this triangle where we are looking for a 5-wave structure in an A, B, C, D, E, and after E we are looking for new highs to come, particularly 36k, as there are some additional resistance over here, which is interesting, between 35.9 and 36.2k. Couple of rules that are important to know about a triangle before I go in depth is that 4 out of the 5 waves have to be a zigzag structure, which means a 5-3-5 wave structure. And if one of the waves is not a zigzag, it's typically wave C or wave D, which tend to be more complex in a double or a triple zigzag. And also wave E can be a triangle, but then again, only one wave in a triangle is allowed to be a complex structure, which in this scenario is then wave C. Couple of things that are interesting is this wave B over here, because I have this wick which would invalidate a potential 5-3-5 zigzag. However, this wick over here is not visible on other charts, so we can take it with a grain of salt, because that wick moved below the low of this wave A, which is not allowed in a zigzag, as a wave B is not allowed to go below wave A. Now inside this wave C, we are then looking for a double zigzag in an A, B, C. Inside wave C, we then have a 1, 2, 3, 4, 5 wave structure, which ends wave W in an A, B, C first zigzag. Then we have a wave X, which is a flat, followed by another zigzag in another A, B, and then a wave C to the downside, which then is wave Y, ending this wave C. If we look at this wave D, then wave D, wave A to the upside, 3-wave structure, a flat in a wave B, and then we have this as a wave C, and that is quite unique because now wave C has to be an expanding diagonal, which is very, very rare, which lowers the probabilities as well for that being a wave C or part of a triangle, but at least that is the way to count this as an ABC structure. And then finally in a wave E, we want to see a simple zigzag structure as well in a 5-3-5. Now if we zoom in, go to the 15-minute, then potentially here you can have a 5-3-5 and this being the end. The problem is that this low got wicked over here, which is not allowed, because if we now look for continuation to the upside in an impulsive structure, 1, 2, 3, 4, 5, the low of wave 1 is not allowed to be wicked, which happened over here. So we then have to count this differently, with this being wave A, this being wave B, and this being a wave C. The problem I have here, however, is this first structure to the downside does not look like a nice 5-wave structure in a 1, 2, 3, but where is your 4 and your 5, right? Is this your 4? Well, your wave 4 is literally one candle, while your wave 2 was multiple candles, and usually a wave 4 is longer than a wave 2. So therefore the probabilities for me are not really on the side for this already being the low of a wave E, and potentially we therefore get another low in this triangle scenario, where preferably I'm going to be looking for a bigger like A, B, and then a wave C to the downside, where potentially we then have something like a 1, 2, 3, 4, 5, which is then another expanding type of structure, with this then being a wave B, and then we get a C to the downside to reach the target box that we have over here for additional support, sitting between 33.8k and 33.9k. Another tip is that all the waves tend to retrace to around the golden pocket to the 786 area, which is the most common target area also for a wave E, which is taken from the low of C to the high of wave D. And as you can see, it's kind of nicely in confluence with that target box below. Now the invalidation is if price would move to the upside and hits 34.871 on my chart. If it takes this high, that is not allowed for a wave E, so then it is invalidated. And if price would move to the downside below this wave C here, then this scenario is also invalidated. If we look at the WXY sideways double combo corrective structure, then in a sideways double combo, wave W and wave Y are not allowed to have the same structure. Now with W over here being a potential ABC running flat, which is very rare, where this is then a 1, 2, 3, 4 and a wave 5 to the downside in a bigger ABC. Wave W is a flat, so then you're going to be looking for wave Y to be a zigzag. But for wave Y to be a zigzag to the downside, again, you want to see price moving down in 5 waves and not in 3 waves like it does over here. So the probabilities decrease as well for this particular scenario, because you want to see like bigger moves to the downside in an impulse, correction, and an impulse, where you then move to the most common target for a wave Y, which is between 1 and a 1.236, sitting between 33.1 and 32.7k. Another target is still the 0.618, which is in confluence with this target box over here. It has to be said that if we look at this range though, then this target box over here, or this order block I should say, has been tested twice on my chart. That is, so over here one candle tested this order block already, and in bullish market structure, preferably if you get impulses to the upside, price is not going to dip below these type of order blocks, entering these type of gaps. Now, okay, price could go to this wick here, but as you can see, the order block is holding, and preferably it continues to hold. So also with this WXY, the target for wave Y would be on top of this order block, but you don't really want to see candles starting closing over here in this particular scenario. So this is an interesting 1 hour order block to keep your eye on. If we then look at this final scenario, which is also bearish but eventually bullish, as all the scenarios are still looking for a move to the upside, then in this particular scenario we have an A or W in a flat, we're looking for B or X, and then Y or C to the downside. Now in general, probabilities are higher to move to the upside and take the double top, so we are, no financial advice, but the trend clearly is to the upside. So any short trades are of course higher risk compared to the long setups. But in this particular scenario, we would expect wave Y to move up just a bit before then eventually a move down. Now this wave Y as well as B or X can already take the double top before then a move to the downside, which would be a great fake out, but we have to wait and see if price of course can make it this high for now. Now for a flat, the 0.9 is a minimum Fibonacci to be reached, taken from the high to the low of A or W in a potentially an A wave B and then a wave C to the downside, with wave C being an impulse. Now if we look inside wave B or X, then we're looking again for a WXY. So you can see this range has been very complex, or became very complex, where we have many different counts, WXYs and complex scenarios running through one another, where wave W here is a zigzag, then we have an X being a flat, looking for wave Y to then be a flat as well, because W is a zigzag, and in a sideways double combo, wave Y and W are not allowed to have the same structure. So we're then looking for Y to be a flat as well. Now wave Y is allowed to take a bit more time, absolutely, compared to wave W. You can see over here that the low of this candle did hit the 105, which is a less common target for a wave B in an expanding flat, in potentially an A, B, and then a wave C. Preferably though, I would like to see that target box being hit, just like funny enough in other scenarios, where also here we have the most common target area for a wave B, the 1.236 and the 1.38, in nice confluence with this support area, for then potentially a move to the upside for wave Y. So this target box is very important. For the triangle, this target box can be the low of a potential wave E over here, for then continuation to the upside. In a WXY, we have the 0.618 here, which is also a target for a wave Y. And in the ABC, we have the potential low for a wave B here, and then we move up to the upside for wave Y, and then A, B, C to finish B or X. So that is quite interesting. Of course, if price takes these highs, we got to observe the reaction like we always do. Always observe the reaction. Now in this range, we've been going sideways. Again, the weekly naked point of control once more acted as support. It's basically been acting as support 3 times now, 1, 2, 3 times, but officially 2 times it has been hit. You can imagine if it comes down again, it won't offer support once more, because the more often you test it, the weaker it becomes. We have the point of control just below here at 34K, but more interesting to me over here is that target area, which also includes the value area low of this range. If we then look at the CVD divergences in this range over here, we got both a bigger bearish and bullish CVD, but I'm more interested in what is happening locally, where locally, after this drop over here, price now created bullish CVD divergences, higher low in price, lower low on the CVD, which you can see over here. If I go to the 30-minute chart, zoom out a little bit, higher low in price, much lower low on yellow, and also a lower low on blue after this wick was made on the chart, this one over here. Now preferably again, the target first of all for this bullish CVD divergence is taking this high over here, which would invalidate the triangle, so that's important to know. But once again, it would be so nice to reach this target box, which also means you're then going to reach the golden pocket, which you take from the low to the high over here, toggle on that golden pocket, and you can see the golden pocket is in confluence with the target box. And then preferably I'd be looking for something more locally. So if price can make it to the downside, I would like to see more local bullish CVD divergence, seeing a bounce, move up, move down, bullish CVD, and then potentially interesting for upside. We do have the bigger bullish CVD over here, but so far more locally, it did not yet create any bullish CVD divergences, as we didn't really have any retracement yet. So you don't want to see a move down and bullish CVD, but that blue target box is definitely interesting. If we keep pushing, that's absolutely fine, because in general, the probabilities are higher for a move to the upside. And that's also what I write over here. In general, take the highs one more time at least. Take the double top, wait to see if there's a fake out or not. Of course, if you're in any longs, make sure you have your risk management in place. We are in a range, no financial advice, but longs should be taken at the lower edge of the range, of course, and not like breakout trading. At least I'm not a fan of that. No financial advice. You can be very successful if you do. But yeah, if you take the double top, be aware of potential fake outs, or we just continue at 36K is definitely a target I keep my eye on. However, in the range, preferably what I would like to see at the moment based on Elliott waves is price finding its way to the target box. Of course, it can move up first and then move down to the target box or directly, but I think this is a great area, a great opportunity to then look for potential long setups by observing the reaction. No YOLO FOMO, catching knives. I hope this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use in my opinion. And for now, thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.